Good afternoon. This is Brian Split with Allendale here for your closing commentary for the week finishing Friday, July 22nd, 2011. And it was another finish to a very volatile week. We did have some mixed trade today at settlement. The September corn contract closing up 10 3/4 cents at 6.90. That is still down 11 1/4 cents on the week, while December corn was up 12 1/2 today at 6.85 1/2. That was actually up about a half a penny on the week. And it was estimated that the funds did buy approximately 11,000 contracts of corn today. As far as soybeans, we did have September down a quarter penny at 13.81. That is down 2 cents on the week. November beans up a quarter penny at 13.88 1/4. That is up 1 1/4 on the week. And again, estimated fund activity today, they bought 2,000 contracts. As far as wheat, had a very strong close to the day. December Chicago was up 14 1/4 at 7.31. That's up 7 1/2 on the week. December Kansas City up 6 cents today at 8.04 1/4. That is up 14 1/2 on the week. And September Minneapolis wheat up 4 3/4 today at 8.38 1/2. That is up 14 3/4 on the week. Although the Chicago market was the strongest of the three today, we did have some stronger gains earlier in the week by Kansas City and the Minneapolis markets based on fears of lower supply for higher protein wheat. But all in all, had a couple things here today that we need to keep an eye on moving forward. The margins for trading soybeans were reduced by 15% for speculators, and that might open the door to some increased volume in the bean market. The funds have been buyers of soybeans every single day in the month of July except for 2 sessions, and in those sessions they only sold 2,000 contracts each of those sessions. So the funds have been building a long position in soybeans pretty aggressively over the course of the month, and lower margins from the exchange will help them continue to do that. Other than that, really today we had a lot of spread unwinding. It appears that the funds were early in the day buying wheat and buying corn against soybeans, or I should say not early in the day, but as the day progressed, and definitely we saw that going into the close. But weather really is still a top priority for this market. We have had some of the bullishness taken out of the forecast in the past several days, with some of the ridging being expected to fall apart a little bit sooner than later, and some of the extreme heat being backed off a little bit with a little bit more precipitation in the forecast. But we're going to start looking again at these extended forecasts for the soybean weather, and as we go into pod fill there, and due to the big planting window that we had this year for corn, we still have some pollination to go through yet, so weather will still be an issue. And it seems like right now we've got all the analysts out there crunching their numbers to determine what kind of yield loss we've seen because of this heat. Looks like we've had some recent estimates. Allendale's recently put our estimate at 153.6 for corn. Goldman Sachs put theirs at 156, but the common theme right now is that we are seeing pretty much everybody reducing their yield expectations, so that should be providing some support for this market. Something else to mention: during the month of July, we've had somewhere between 1,200 and 1,300 locations reporting record high temperatures for that location. Now, we've seen some very hot weather, but an interesting piece of that is over 3,000 locations have reported record high temperatures for the overnight time frame. And if we look back at last year, that seems to be one of the major issues that silently reduced the crop yield, even though the crop conditions were reported every week as pretty steady, good to excellent ratings. But in the long term, we had short kernels last year, and a lot of that was attributed to these high overnight temperatures. And again, we are seeing that this year, maybe even worse than last year, so that's something to keep in mind. As far as the meat markets today, we did have some strong buying. The hogs definitely leading the way today, with the August contract up 270 and the Globex market late in the session at 180. October up 207 at 92.72. We did have the August contract briefly hit the limit at 101.10. Talk of higher cash today and expectations of higher cash on Monday provided support. We've also got trade talk that China, bought a bunch of hogs here, and we're going to have delivery time frame going through the month of October. So that's keeping the the hog market well supported here as well. As far as the cattle, we were higher today there as well. A little bit of spillover from the hog markets. August up a buck at 111. October up 60 at 116. We advanced higher today despite some lower cash trade this week. We've had the feedlots selling aggressively due to this heat. The animals are not gaining weight. A lot of animals reportedly dying because of the extreme heat, and that just puts a more bullish attitude towards these deferred contracts, because the animals that are being sold right now are being sold early, and they're being sold at lower rates than they typically would be. So that's something that is going to continue to keep support under these deferred contracts, and we maintain a bullish stance on the 2012 cattle contracts at this point. But we are going to have a report this afternoon that's expected to show some lower placements and also a lower overall herd year over year. As far as outside market activity, we do have the Dow futures down about 57 points at about 12,633. S&P futures down about a point at 1341.5, and NASDAQ futures actually up 18.5 at 2428.5. Dollar up 17 today at 79.40. Yesterday we did have a very poor close. We violated the short-term uptrend that this market's been working on, and we did fail at that same uptrend on an early rally today. But overall, the dollar is still trading in a very sideways range, and well within the large range that was established during the month of May. So we're still looking for a movement outside of that range for further direction. Crude oil up 65 cents at 99.78. We've seen the nearby WTI crude contract, which is the crude oil that is here domestically, has traded above $100 this week, although we aren't really gaining footing over 100. So if we can get some solid closes over 100 next week, we might expect that market to try and advance near the 104 to 105 area. If we do fail here, then a pullback down to the 94 to 95 area would be very reasonable. Other than that, looks like the metals are still very strong. Gold up 15 bucks today, over 1,600 an ounce again at 1602, and silver up about $1.20 at 40.15. So some very strong moves in the metals here today, even though the dollar is higher. And that is your recap for the trade here today. If you have any questions at all, please give us a call at 1-800-2-MARKET. That's 1-800-262-7538. You can also check us out online at www.allendale-inc.com. And good luck trading to you next week. Thank you.